Hi everybody, Alex Deploy here from Expert Forex, and in this video on how I became a millionaire by finding perfect indicator and robot settings, we are going to be looking at creativity, and this is the third video in this series. So in the first video we looked at psychology and ownership, where you should be the boss of your indicator or robot and take ownership of it and give it the instructions that it can understand. Then we looked at sensitivity, and we looked at how the period that you set your indicators can give you less sensitivity or more sensitivity depending on the period that you use. And then we looked at the dangers of whipsaws and how false signals can come about when you're using indicators, and we looked at ways of sort of avoiding whipsaws. And in this video I'm going to be looking at a bit of creativity, and the creativity is all about avoiding whipsaws and giving us really strong trend information. But before you watch this video, make sure that you've watched video 1, and here is video 1. A link to video 1 will be in your top right hand side right now. Click on that, watch that video before you watch this one, and then here's video 2. If you haven't watched video 2, click on this link on the top right hand side of the screen and you can go and watch video 2, and then you can come back to this video and watch the rest of it, because it is a continuation of the previous video. And as I said, I'm going to be focusing on a bit of creativity, on how to avoid whipsaws, and we've already spoken about sensitivity. Okay, in the previous video I used the Aussie 1 hour, and we're just going to continue on the Aussie 1 hour because it's got some nice trends, but it's also got some sideways markets, so it's a good example of what can be done. And we used a number of moving averages. I think we used the 100 and then the 40 and then the 12, and we looked at various alternatives. Now in this particular one I'm going to just look at another aspect of this particular indicator, which is the moving average indicator, and we're going to have a look at how we can get it to be more sensitive. Now on the screen here you can see the 12 moving average, and as we said, the shorter the period, the more sensitive it is and the more whipsaws it will give. So we need to think about how to avoid those whipsaws and become more sensitive at the same time. So I'm going to just take a run here, and I'm going to change this 12 to 8, and I do a lot of these things on the fly because I'm very experimental. And here you can see the moving average actually catching some of the trends really early, and the changes of trend very early, and the start of a new trend very early, and so on. So ideally we want to really catch that trend, but the problem with the moving average, if you look at it, it goes up, turns and comes around, and by the time that moving average is pointing down, look where the price has already gone. It's gone right down here. So using those turning points in the moving average, they look great on the chart, but your actual entry ends up over here. So what we want to do is we want to make this turn happen earlier so that we can actually enter the trade a lot earlier. So let's just have a look at the setting again. It's the 9. It's set on a typical price, which is the high, low, and divided by 3. And so now, how can we make that turn happen earlier? All right. So what I'm going to do is I'm going to add another moving average. So we'll go in and we'll go insert moving average, and we're gonna, this one's 9. It's the same as the previous one. It always remembers the previous one. I wonder what color I could use on here that's pretty clear. All right, a light blue will do. And what I'm going to do, I'm going to keep it as 9, but I'm going to make the shift -4. Let's just see what that looks like. I don't know what it's going to look like. Let's see what it looks like. And there we go. All right, so what we have done now is, can you see the turn used to be on this side of the white line? Now the crossover of the two moving averages is on the other side of the line. So that is in fact the sell signal, not over there. It's now we've moved it forward. So let's have a look at the impact of that. So, okay, so if we look at our crosshair here, we can see that the entry is now up there. It's no longer down here. It's up there. So we have now moved the entry a lot closer to the turning point in the market. But and look at that entry, how if you then treat that the crossovers as an entry, the crossover over here would be your exit, and look how long it keeps you in the trend. And then there's another one, keeps you in the trend. There's another one, keeps you in the trend. There's another one. So really fantastic method of firstly creating earlier entries, also keeps you in the trend so much longer. Now we need to look at a few other things, and here we can see almost, not quite, almost a whipsaw. Now how do we fix that? The other way of fixing that is to take this and go -5. And we say okay, and there we are. So now we've eliminated some whipsaws that have occurred. There's still one, but that's not too serious. And but as you can see, this combination of moving averages keep you in the trend for a huge amount of time, keep you in the trend for a huge amount. That was actually still keeping you in the trend, and there you would change over, stay in the trend all this way down, move over, stay in the trend over there, and so on. And look at this here, you enter here and you're still in the trend as it's going up. And you can see it. Now there are whipsaws that do occur, but I'm going to show you a way of actually eliminating the impact of them. But you also can see that some of the trends, if you look at this trend, it just keeps you in the trend all the time. It keeps you in the trend all the time. So fantastic way of using the moving average in a creative way. Now I'm going to show you an even more creative way. When you sell, it's because the highs are actually running out of steam and coming down. When you buy, it's because of the lows are running out of steam and it's going the other way. So the other way of setting this up is to set the moving averages up out based on the high to sell and the lows to buy. So in other words, all you would do is you'd go like that, and instead of using the typical price, you would use the high. This is for selling, okay, and then this one would also be the same, and you'd say, no, I want this to be based on the high. Okay, so what that does is it also now is reading off the area that runs out of steam, and therefore your signals are a lot faster than before. The opposite applies to buy. So you would only use these set of moving averages for sells, and you would then create another set of moving averages based on the low, and like that, based on the low. Okay, so now these ones, see how they keep you in the trend so much longer. They give you the signal when the price is still, and in fact when the signal is there, the close of this candle is in fact below the moving average. It's over there. So you have now increased the speed at which you're getting buy signals and sell signals by basing these two moving averages on highs and lows. So let's have a look at an example of that. So what happens is you end up having sell charts and buy charts. You do your buying on the buy charts and you do your selling on the sell charts. The sell charts enter a lot earlier in the trend and and put you in the trend. The buy charts keep you in the trend a lot longer and help you to get into the next phase a lot sooner. Also, this gap between the two MAs help you stay in the trend for a long time, and you can see it eliminates so many whipsaws considerably. It does occasionally have a whipsaw or two, but very, very seldomly. And if you do have a whipsaw, too many whipsaws, you just adjust this. So if you have too many whipsaws, let's say, then you just make it -6, and suddenly that whipsaw is gone. So you can play around with these settings. I'm showing you the principles that I've used, and please feel free to use these principles in your own trading. But it just shows you how using indicators in a creative way and having knowledge about sensitivity and whipsaws can really make a big change to the way you trade and the way you take signals from your trading charts. Now, I hope you've enjoyed this video. In this video, I've shown you a number of principles. The one principle is to use two moving averages with exactly the same settings, but separated by the offset, and then using the crossovers of those for buy and sell signals. The second principle that I've shown you is to then use buy charts, which are based on the low of the candles, and sell charts, which are based on the high of the candles. So these are all ways of giving you the edge in the market. Now, all you need is an edge and in the market, and consistently apply it, and you'll be successful. The other reason for this is that it keeps you in trends for so long. It is really one of the soundest ways of trading trends that you could ever find. Now, I look forward to your comments in the comment facility provided, and also please watch out for the next video where I will show you some more applications of how I use moving averages to help me trade the Forex market. From me, Alex Employee, cheerio.